Yeah, hi, Lila. Please go ahead.
Hi, sir. So I already posted in the group actually. Yeah, inside bar sometimes the first one doesn't work, and then 1 or 2 days later it works. So how to time it exactly? So when that photo which I already posted, then I checked with moving averages, weekly, monthly, everything. I still couldn't find the answer.
What exactly is your question?
Uh, so two inside bars looking same, right? The first one did not work, but the second one worked, and then followed the next kind of work, big CB and uh, so yeah, why the first one did not work and the second worked. That was the chart on SJVN.
Okay, you have recently posted it.
Yes.
Second mark worked and first did not. Okay. If you see the chart, see where you are in the bigger scheme of things. You are in a big range, right? In the range, nobody knows how much time you will spend. That is one thing. And whenever you are buying during the consolidation, because if you see on the left hand side, we have been coming down, we are in a pullback. So it takes time to stabilize yourself. So whenever you will be buying these kind of trades, even in the future, patience will be required. And the answer to that is, I can see that this is actually a contraction of the weekly time frame.
Yes, it was.
So the scale of patience here is of weekly. And that is why you see the days are passed. But is there a way around it? Yes, there is. I'll leave it up to you how much you observe, what do you observe. But this is a good point for you to make a few observations and you can have your answers. Because
Okay.
as of now, I'm bounded, right? I've not taught a lot of other things to you. So I'm bounded to answer within those boundaries. But anyways, even if you bought the first one, okay, you can have some patience because such is
Yeah.
the setup you're playing. That is one answer as of now. But there is
Yeah,
more
there
to
was not much of damage in that one actually, but could have been right on the just what 2 more days so patience, but
could have been. But there is more to it later on when we move ahead. But it's something that has been taught to you. I'll only integrate it together. You can find the answer.
okay, I will try that.
Yeah. Anything else?
And the second was just observation and just feedback, right? This the last lecture that really have to the clear like avoid the volatile names. So I I made my notes and I was thinking that some charts were very easy to look at, right?
Exactly.
It's like textbook charts, and then other one were very hard. And then I was trying to put something together and trying to find some theories, but then it's just easy to avoid those and yeah, focus on those which are easy to look.
Exactly. It's more of a visual thing. You can't define smoothness. It's a very subjective term. So it's better to, just train yourself and see those charts. And this is very essential because when you'll be scanning, you'll have a lot of stops. So it becomes very important to select the best ones.
Yes. Yeah, that's it from me.
Okay. Anyone else? Any other doubt or query? Okay, I have a question for everyone here. The question is, when will a stock be truly in stage 2 on any given time frame, on a single time? When can you say it is truly in stage 2? Yeah, Ashish.
When what moving average we are following all are in upslope, then we can surely say that it is in stage 2.
Can any two of them be intermingled?
Smaller one can be,
Can be.
but not the mid-term and long term.
What if I
moving
only use two moving averages?
Which ones?
One is fast, one is slow.
And if we are not sure which time frame we are asking this question about,
Pick any time frame of your
for
choice.
example, if it is daily, I will go with 50 and 200, and if both are upward slope, I can say then it is in stage 2.
Yeah,
The smaller ones, if they are not in the upslope or sideways, or it can be pulled back consolidation, etc. But
still, I'll only use 10 and 30. Then what? At what instance I'm saying? A chart in its journey, when it's going up, yes, there will be times where the 200 ones and the 50 ones will be good, but the 10, 30, 50 might not be. I'm saying when exactly it is truly in a very good, healthy stage 2 phase. Because in stage 2, you can have a pullback. In stage 2, you can have a bigger pullback. But there'll be phases in stage 2 where the stock will be looking very good. What will happen in that time? It's a very easy answer. Just think about it.
When it has made a new higher and higher lows.
You are in stage 2. That is what is going on. The answer is centered around moving averages. Yeah, Rodog.
Sir, I guess, well, even the lower moving averages are upsloping.
Yeah, exactly. Basically, the answer is when all the moving averages are upsloping and not intermingled. Doesn't matter it's a 3-day, 5-day, 7-day, 6-day, 10-day, till whatever, 100, 150, 200, 500. All the moving averages will be upslope and they'll have a distance between them. That is the answer. So now think about it. So now my question is, when will something not be in stage 2? Well, the answer is simple, that according to the moving averages, they are intermingled. So now think about it. You will often see this when the moving averages are intermingled. We are in a range. Price gives a big move to come out from the range, then gives you, contraction 1, 2, 3, and that is how the count goes on. And basically a move comes. So this is a very important idea for you to think about. Somebody in the group has written about this. I'll not tell who was, but think about it because this is a very important topic. As in few lectures, we'll be going back to stage analysis and the moving averages, but in an entirely different world altogether. And Nila, you asked the question, today the SJVN chart. Use that chart as your reference and see what I'm trying to get out of here. Whatever I'm talking about in this session, see that chart, everyone. And I hope everybody heard his query. And see the charts. See where the answer lies, why this happened. And I've also posted, one chart about, 2 CB candles, which one is better. It's so important that I'll have to make a very detailed video separately for that. So I'll do that. So if in case you haven't answered to that question, please do. It's very important for you. Any other questions we have, any doubts or queries or observations we have from anyone? Okay. Also, there is one more thing. Whenever you see the moving averages, moving averages 10, 20, 50, 200, always try to observe the behavior of the price around moving average. What I mean by that is, when let's say you are analyzing the stocks, as I said, the focused approach, that it comes to 10 and goes up. That is what you are trying to figure out, that there is CB comes to 10 and goes up. Now your job is to see what kind of CBs happened before that. Were there 2, 3, 4, 5, 6 candles, or a single candle, or a couple of candles? How much was the move? Where those candles were closing, near to the high or what? Then see what kind of candles were being made at 10 and before the move resumed from 10. Observe this, how many candles the stock made at 10 before the move started. This is one way to go, and then see, was anything happening on a bigger time frame? If you are analyzing this on daily, you can see weekly. Was there a inside bar on the weekly, or there were none? Or how was the monthly looking? Was there any event or location? Try to see. And if you remember from the lecture of location and events, I said that, resistances and supports are locations and the events are breakout or breakdowns. The same thing applies for the moving averages. Moving averages are nothing but supports and resistance zones. So events also happen there. What are the events? The crossing of a moving average. Price crossing above any moving average. That is also an event. So try to think about it. See, when the price is bouncing from 10, was there any cross in any moving average? If yes, which? And then, you can move ahead and see about the 20. What happens when the price goes to 20 or even a little below 20, but doesn't go till 50 and spends time between 10 and 20? Why is that? While you see some goes to 50. Why is that? This is how you should approach practice. Always write down the question what you are behind today and then try to go for that. And going forward, I'll give you assignment. I'll give you one chart, single chart for everyone to analyze, and then do a very in-depth analysis of it and try to make things out of your own. Because now we'll move into a very different world and things are going to get much clearer. And one more thing, that see the time frame lecture also, once, and try to watch all the lectures again. It will immensely benefit you, because now your job is to integrate all the lectures and see what do you come up with. That is very important. And there was a question I posted regarding the lecture 14, and the answers are, amazing. I think it's going to be very easy for the people here to start trading once we have some solid ground for that. Because now I can see that the perception thing is going pretty great, definitely for the people who have answered. because that is the difference maker. And I'll post this. This event has already happened. So I'll post what has happened in the stock. Once I get few more answers, I'll give probably 4 or 5 days more. But the people who have answered, I think all the answers are correct and brilliant. And why is that? I'll also tell you one thing. Because once you get the knowledge, once you get the understanding of things, you feel a lot of power that I'll do everything. But you have to do the exact opposite. Being a retailer, independent trader, private trader, this is the greatest power that we have, that we can choose which stock are we going to deal with and which one's not. Make use of that. Don't be a slave to the markets. You know it doesn't mean you have to. And this is a problem you will run into in the future. Most of the people, when they learn, they feel they can trade anything and everything, which they can. But then it becomes difficult to focus. Even if you see the last video that I posted about the trades, Triveni Turbine, I let go. That stock is, I think, up 10 or 8 or 9%. But anyways, let it go because you have to. So that is something you should keep in your mind. And try to practice on the time frame charts where you think you will be very comfortable managing with your current lifestyle. Because let's say you are practicing on 15 minutes or 1 hour, but you don't even have 30 minutes in your 24-hour day to spend time for the, trading, selecting stocks and all that. Then there is no point doing that. Then do it on the weekly. If you think you have time, you can stick with daily and weekly. But if you're going lower than that, that will require active, screen time. So if you don't have that, avoid it. And one more thing, keep on top, is common sense. Never lose that, because that will happen. Always be aware that what you're dealing with, and use common sense. Because see, the concept of relativity is actually common sense only. It's nothing more than that. Because let's say you see a stock has a CB of 8%. It has moved 10%, let's say. It went 8% up, then it went 4% up. Then you see that while the contraction was starting, it started with a minus 6% candle, big red candle. Is it good? Definitely not. When your contracting candles are bigger than the expansion candles, what does it actually mean? It is sowing the seed for reversing that the expansion was actually happening on the upside, but now you see that while in the contraction, the candle of contraction is bigger than the expansion itself. I hope I don't need to teach this. I hope this comes out. But anyways, I'll document it just to have it in our repository. This is also one thing you should observe, that the contractions which stopped at 10, what kind of candles they started with, or what kind of candles in general they had all throughout the contraction. The ones which came to 50, how did they start? Because at some point of time that would have been above 10, but it failed to do anything at 10 or 20. That is why it is at 50. Try to see that. There is a lot. Okay, so anybody has questions, doubts which you did not ask? Or even observations, anything to discuss as well? Kya Mayank Bhardwaj, go.
Good morning, sir.
Yeah, good morning.
So what does the cycle help us? Like there is a range, then CB1, CB2, CB3, again range. So what does this cycle help us to understand?
When you say CV1, 2, 3, are they consecutive or they have contractions in between them?
Yeah, they have contraction in between them.
Okay. Think about it. When you say cycle, when you use the word cycle, that should include time frames in your thinking. That is one thing. When you say CB1, CB2, CB3 are different and the CB3 you see goes to 50, try to think all that has been taught. What do you think? Why does it happen? And you have used the word cycle.
So doesn't it help us to, basically help us to make sure that there is a new base is forming or not?
New base. What is
Yeah,
new base?
let's say I have a CB3 and then there is a range forming after that. Then I know a new base will be formed. It can be up or down, CB1.
Okay. Try to think in terms of time frames and 3 to 5 candles framework. And scale of the time frame. Basically, what I'm seeing is you are not able to integrate it. You know it, but you're not able to integrate it and make sense of it. That how does it actually help me?
Yeah, basically, if it is going into the contraction on the higher time frame, then it will go into the range on the lower time frame.
Okay. So, yeah, how does it help you? Now you answer.
I'm not finding the exact word here. But basically, it is, if the higher time frame is going into the expansion, then our lower time frame will go into the, up move or uptrend.
Okay.
And there will be expansion on the lower time frame.
Yes. So, Ashish has mentioned in the chart that it helps you with the timing aspect. That's very important in the markets. If you see your monthly has done the round of CVs and monthly is now going into contraction phase, do you care trading that stock? Will you care trading that stock?
No.
It tells you there. It helps you to narrow down your focus.
Okay.
And if you are an investor, I don't like to use investor, but someone who wants to play for bigger scale for a long period of time, you will be interested in that stock. That, okay, monthly has done the round of CBs and now it is contracting.
Okay, sir.
So whenever you see the signs, then you will be active and you will start buying it. And then you will get the move and everything. But it's about a lot of things there. Whatever you have said, it helps with execution, timing, scaling, a lot of things.
I see.
And you probably would have observed in the stocks that whenever monthly is giving you a setup, wherever something is happening on the monthly, those are the stocks which will give you amazing returns. Basically, amazing trends on the daily time frame. Everyone probably would have observed this. Now, the people who want to trade options, stock options, index options, for them, I'll give you one simple tip. First, observe the stocks. How do they behave when monthly is doing something? What happens on the daily? What happens on the weekly? First, see this. Once you have solid understanding that, when the monthly is giving a setup, then I've seen that the moves are 100%. So the simple tip for you is, as an index trader, treat your daily as a monthly, your hourly as a weekly, your 15 as a daily, and your 5 as a 1. Now, I'm not sure how many of you realize the importance of this. Vaishadal never, if somebody has good capital, even decent capital, I mean, doing options and all that, don't do it every day, is what I'll say. Do it at times. What times? When you see some event location, not event of those, news and all that. No, not that. Events on the chart. What does that mean? When daily is doing something, coming out of a range, or you see a setup on the daily itself, that is where you can be active if you want to trade. I'll not advise you. But if somebody wants to, somebody has one, that is how you should treat it. But anyways, just wanted to give you that this is how you can have your perspective around things. And if you find your index doing something on the monthly, so you will see a lot of things happening in daily chart. Probably the most of the rallies you will see, that is the reason behind it. But the thing is, in index and all that, the occurrence of these events is a little less. That monthly does something, because it takes a lot of time. But anyways, just note it down, just keep it. This will probably help you in the future. If somebody here starts to venture in that field, this will help you big time. But anyways, same goes for futures and option stocks as well. FNO, if you want to trade in the future segment, this is what you should look for. Treat your daily as your monthly. And for this, you will have to practice good on the monthly, weekly and daily for the stocks. Because once you do that, you will know, you'll get the idea. And this is just a simple hack for the people who have the understanding of how the monthly, weekly, daily behave of the stocks. If you don't have the idea, you will not do anything on the indices and anything of that sort. Yeah, Ashish.
Sir, I just want to add one thing related to this moving averages thing. In the lecture, you mentioned objectification of relativity with moving averages. What I have observed that it does help a lot because it works most of the time that when a stock has moved beyond 20% and less than 50%, most of the time it goes between the 20 and 50 moving averages. So it makes the job way simpler to relate to the relativity with respect to visual thing as well. So it works most of the time, which I have observed, if the stock is in clear stage 2. So it makes it very easier rather than only depending upon the visual thing.
Correct. And if this has really helped you, the next few lectures, they will take time to come. But when they come, they'll bring super clarity, is what I'll say. Especially the timing aspect. You can time your trades to perfection, is what I can say for now. But yeah, that is how it will help you. And everything is going to be based on stage analysis. That is why I always say, it's a powerful concept, very important concept. And today I've tried to push everyone in that direction in the beginning of this session. This is recorded, so you'll get it, even if you have missed it. But yeah, and remember, I always said stage analysis is a relative concept. Think. So I'm trying to get something out of you. But we'll see. So I'll wait for a few weeks, let's say. I'll give you time to think. And if I see you have tried, or some people are just not trying or just not clicking, then I'll give you that lecture. But it would be great if it comes from you. It's a little complex, not a lot, because I've driven already you guys in that direction, especially in today's session in the beginning. So you have a ground to work. And whenever you feel stuck, always think out loud. Just talk to me in this live session that this is what I was thinking, this is what I was doing, this is the brainstorming I was trying. Am I right? Am I wrong? So I can give you the direction. Try to do that. Make it interactive and, fun. Gyanile.
Yeah, sir, it's recorded, so I'll watch it again. But can we just still discuss it a little bit more about the stage thing, when it is or not stage 2? So my observation, I was just trying to think about it, so thinking out loud now. So all moving average should slope up, right, in stage 2. But there will be some later and maybe in second, third phases or somewhere it might come situation where so your slower moving averages are up sloping, but then your faster moving averages are just maybe down sloping, and just the price is pinching between two moving averages. So it's a contraction, right? It's a contraction, so it's pinching between two moving averages.
Correct. That is true. But what I'm saying is, in the strongest stages, you will see that even the contractions that happen are not able to bring down the moving average, or make the crossover of the moving average. That is what I'm saying. So nothing too complicated.
Yeah, that's what I mentioned, that few of the stocks sometimes don't even come back near to even 10 moving average. They just keep on going, and after one big move, they consolidate, then they come back to 20 or 50.
Do you know why that happens?
No, not yet. I have not figured it out, but I guess on the higher time frame, it could.
Yeah, that is the answer. That is the answer. That at times what happens is your bigger time frame triggers something, some event, location. And those people, when they come, the move will be according to their scale. So when that happens, so whenever something is happening there, you will see that the smaller time frames will not even come to their moving averages. That is how strong it will be. You will not, let's take an example. Let's say monthly is doing something. Monthly is doing something big. When I say big, that means something is probably even happening on the 6 month or 3 month. So the scale is much higher. And you are, as a trader, operating on a daily. You will see that your daily will not come to its 5-day moving average. If you plug it in and see, you will see that you are finding your setups on the hourly. Not even on daily. Forget about week. You are finding setups on the hourly. This is the case. Write it down. This is recorded. So whenever you watch it, write this down. Whenever your bigger time frame is doing something big, something important, going into the all-time highs, and the DNA of the stock is good, and all that, and the CBs have been good on the daily. In those cases, you will often see that the daily just shoots up. If you wait for something, it probably might not come and, give you the setup that you are looking for, because something is happening on the big time. In those cases, you will see that, hourly gives you the opportunity. But this is a topic which I'll touch very later on, probably after a year or so, because it's not of a use unless you are good with the daily itself. But anyways, this is the reason that whenever you see a stock which on daily just shoots up, gives you 2 inside bars, and then again prints a big CB, then does the same. The reason for that is something is happening of a much bigger scale. So that is what I give you for now, and that is the reason actually. Gyanurag.
Sir, my observations is like, so suppose a stock is contracting in a weekly setup, and just like Rani Madras discussed, the reason what I felt, again observing the chart, is related to we should wait for the stock to come in a range in a lower time frame or timing the stock.
Explain more.
Regarding that, when it did not shoot up from the 10 EMA weekly, what I saw was it wasn't in a range in the daily setup. When it came in a range in the daily setup, like all the moving averages were intermingled, the lower 3, 10, 20, and 50, and it took support at 200 EMA in daily, then it went up. So it might be helpful in timing those events. So we should look for a lower time frame in case of timing our trade. But sir, my question is, what should be the difference factor? Like when we are searching for the trade in weekly, I saw this setup in daily. I have been observing this, but sometimes I see that the ranges are being found in hourly or sometimes even in 15 minutes too. So what should be the difference factor between those time frames?
Okay, so the difference with factor has to be in 3 to 5 candles should be there, So like let's say weekly, weekly how many daily? We have 5. Daily candle, how many hourly we have? I think around 6.5.
Okay.
So that is the factor you can keep. So you can use, monthly, you can use weekly, you can use daily, you can use 1 hourly, you can use 15. That is how you can use it. These are the time frames which everybody uses basically out there. Not a lot of people use 75. Or especially in India, I've seen not a lot of people use 4 hour, but I've seen the traders in the US and all that. They use 4 hour, probably because their timings is from 9 to 4 something. I'm not sure what is the wiring, but they use 4 hour. But I'll give you this, that what time frames you have to use and all that. And you will have to stick with that. You have said it correctly, but okay, I'll put a question here. I'll drive the discussion towards that. As you said that let's say your monthly is in contraction and it is contracting till it's 10 EMA, let's say.
Yes, sir.
Where will you see the CB coming first?
CB?
Yeah, CB.
CB or demand candle?
CB.
Acha, the CBs.
Again, listen, wait. The question is your monthly is in contraction. It is in contraction.
Yes, sir.
While it is in contraction, where will the CB be first? While the monthly stays in contraction, where will your CB be?
Daily.
Daily, right. Because if I say, okay, monthly is in contraction, I'll wait for a monthly CB. By that time, the stock probably would be up 80 or 100%.
Yes, sir.
That is an opportunity wasted. So now think about it. I've used monthly and daily.
Yes, sir.
Stick with daily. That CBs, as I've mentioned, that CBs we will be finding on the daily. You can have the CBs other places as well. So this is the example I gave, monthly and daily. Now, keep this in mind that CBs, we will be looking for CBs on the daily while scanning. While scanning, we are looking for CBs on the daily. Don't forget, ever. But
yes,
now replace your monthly with daily and daily with hourly.
Yes.
And try to think and try to observe the charts.
Yes, sir, I have observed it that way. But what I found that it should come in a range. First, it should be in a moving averages should get intermingled in a lower time frame prior to the move. And that might be our point of entry, what I've observed.
That will always happen with some of the smaller time frame whenever bigger time frame is doing something.
Yeah, but then we will account for that difference factor, right? What I discussed just now, that 3 to 5 candles. And if the setup is within that difference, it's okay. Otherwise, we will just move on.
Okay. So what I'll advise you to is your thinking is right. And you're going in the right direction when you're saying range, but you are saying there is a contraction. You're in the right direction. Try to think in terms of
I in practice more and come back to you. But what I said just now was that the higher time frame was in a contraction, and we are expecting a demand candle same at 10 EMA, 20 or 50. So we are searching for it. Now, the clue to it can be gathered from seeing the stock in a lower time frame, keeping in mind that difference factor. And if that lower time frame starts to be in range, just like it has just started to go in stage 2 in the lower time frame, then we can time our trade.
Yes, you can. Okay, yeah. Think more about this, find examples and observe.
Yes, I'll come back to you after practice.
Yeah, please do. Anything else? Anyone? Okay, I'll give you one more thing. We have discussed this, but always remember that your trend is always relative. Because let's say you say, oh, it's an uptrend. It doesn't give any information, honestly. And I hope you can understand why is that. If anybody has doubt, please tell me. Because I'm assuming you know it. That trends are always relative. Okay, I hope this is clear. Great. I think I've given a lot of things in this session. I've tried to hold myself back because I'll wait for you to come with conclusions, and I can see you are going in the right direction. So now you have to think that how can I time, when you observe a chart. Let's say you took the approach of 10 EMA, daily comes at 10 EMA, goes up. How can I time? What are the clues in the framework, with the things that you have been taught? How can you time it? Now see, if let's say you have a monthly setup, you can time it to being early 5-6 days. That is something you can do. And I think in a monthly setup, if you can do that, that is not a bad deal, to enter a stock 5-6 days before the move actually commences. If you find a daily setup, it is good to enter 3, 4, 5, 6 hours before. Right. So that amount of patience will always be required in the markets. Just because we can time doesn't mean you run out of patience. Let's try to keep this in mind as well. But anyways, a good session today, and I think we'll end it here. And go watch lecture 14 if you haven't, and there is a question posted which you have to answer. It will really help, because if you are able to answer, whatever answers have been done till now were beautiful. If you are able to do this level of work, trading is going to be easier, is what I can say. So great, everyone's doing good. Just keep it going. And yeah, I'll see you in the next live session. And